Welcome to The Explainer. Today, we're going to break down the huge structural shifts happening in Japan's real estate market. The ground is really moving under everyone's feet, and you know what? All the old assumptions, they just don't apply anymore.
For decades, the name of the game was simple: build more, sell more. But that era, it's over. It's been replaced by a totally new reality, one that's driven by some pretty powerful economic forces that are definitely here to stay. Okay, let's dive right into this.
All right, the first thing you really have to understand is a change that isn't going away. Soaring construction costs have become the new normal. And look, this isn't just some temporary spike, it's a fundamental shift in the entire economics of building anything.
So what's really fascinating here is the paradox this creates. If you just look at the total amount of money, the total yen being invested in construction, you might think things look pretty healthy. But that's just an illusion. It's a mirage created by inflation. The actual physical amount of stuff being built, the actual square meters of new offices, homes, and warehouses, that's actually shrinking.
And this chart just lays it out perfectly. As costs for literally everything, from steel and concrete to skilled labor, have shot through the roof, the ability to build in large quantities has just plummeted. It is a classic squeeze, and it's forcing the entire industry to completely rethink its game plan.
So this forces a total 180 on the old business model. Developers just can't rely on selling a ton of properties with razor-thin profit margins anymore. Instead, they have to switch to a whole new model, building fewer, higher-value projects in the best locations that can command a much higher price. Now let's see how this whole shift plays out in the housing market, because that's where these big economic forces are felt most personally. This is where the cost reality really, hits home.
So, the central question for so many people is this: why does the dream of owning a new home feel like it's drifting further and further away? The answer? Well, it lies in a simple but pretty brutal economic chain reaction.
It's a really clear three-step process. First, construction costs just explode, and that pushes up the price of new homes. Second, with real wages staying pretty flat, those new prices are just way more than many household budgets can handle. And the result? Demand is forced to shift away from buying and straight into the rental market.
And you can see this trend playing out in the hard data. This chart of new housing starts, it shows a consistently weak slice for owner-occupied homes, houses that people are building to actually live in themselves. The purchasing power just isn't there to keep up with these rising costs.
So here's the crucial takeaway. This pressure is leading to two major and probably lasting changes. First, new homes are literally shrinking as developers cut down the floor space just to keep the final price tag from becoming completely insane. And second, there's a really clear flow from ownership to usage as people who get priced out of buying become long-term renters. And of course, that props up rental demand, especially in the big cities.
Now, this cost pressure isn't affecting all properties equally. Not at all. In fact, it's creating this dramatic split, a clear fault line running right through the middle of the market, sorting everything into two very distinct camps.
On one side, you have the winners. We're talking prime real estate in central Tokyo, or those high-tech logistics centers. And what's their secret weapon? It's the ability to pass higher costs directly onto their tenants through higher rents. But then on the other side are the losers. Things like general housing or projects in regional areas where there's just no pricing power. They can't raise rents, so they can't absorb the costs. And that forces projects to get delayed or even canceled completely.
And get this, even within a booming sector like logistics, which is being fueled by all our online shopping, the game has changed. The old days of, if you build a warehouse, someone will use it, are gone. Now, location and the ability to support advanced automation are absolutely critical. It's no longer about just having space, it's about having the right space in the right place.
So, if the old model of just building and selling is broken, what does the path forward even look like? If volume isn't the goal anymore, where does the industry go? Well, the answer seems to be a big pivot from quantity to quality.
Success isn't defined by brand new construction anymore. Instead, the focus has to shift to making the absolute most of what's already there. We're talking about smart renovations, converting old offices into apartments, creating value through better day-to-day management, and justifying costs by improving long-term energy efficiency. It's really about being smarter, not just bigger.
The companies that are going to lead this next cycle are the ones that build what you could call a muscular business structure. This basically means a lean, resilient model that can make money even with today's high costs, and, this is key, one that doesn't depend on just hoping for the best when it comes to future demand. It's about being profitable in the world as it is, not as you wish it would be. And that leaves us with a final and pretty crucial question. In this new era of selection, where it's all about quality over quantity and smart value adds over just building more, where will the next wave of innovation and real opportunity actually come from?
And that's our breakdown of Japan's new real estate reality, a market that's now defined by selection, not just volume. Hey, if you found this insight valuable and it helped you understand what's going on, please do me a favor and hit that like button and subscribe for more explainers. Thanks for watching.